Today for our homeowner news, we're going to be talking about what is a loan servicer, when should you call them, and when you should ignore them. Now, first of all, when you buy a house, most of the time your lender is going to sell your loan. And back in the day, I don't get this question anymore. People would go, Jen, why did you sell my loan? What did I do? And I'm like, no, you didn't do anything. There's some companies that specialize in originating loans, meaning my company specializes in getting you into a house. We specialize in refinancing. We don't specialize in sending bills. There's other companies where they specialize in sending the bill and managing your escrow account. That's a loan servicer. What I think is important to know is that when your loan transfers, they don't really own your loan. So over 70% of the mortgage business is owned by either Fannie Mae, Freddie Mac, or Ginnie Mae. So whether it's my name sending you the bill or XYZ Corporation, one of these companies generally is going to own your loan, okay? Which is great, because Ginnie Mae is for veterans and FHA, and if there's ever any huge crisis, they have a ton of help. Fannie Mae and Freddie Mac, same thing. They have a ton of help whenever there's a crisis. So the bulk of the loans that I personally do fall under that category. Now look, could you be a super jumbo loan where you have something different going on? Yes, but the bulk of the market is going to be one of those three things. Okay, so we do your loan, yay, you got a house, and now it transfers to XYZ Corp. Now, they're going to send you your bill every month. So if you have problems setting up auto pay or if you have a question about your bill, that is going to be who you want to talk to. If something a lot of people don't know is if you have a conventional loan, and let's say you bought a couple years ago and you did 3 or 5% and your equity's really gone up, you can actually call your servicer once you have over 20% equity and ask them to remove your mortgage insurance. Conventional loans are the only ones you can do this with. So FHA, you can't. VA, you don't have mortgage insurance. But for everyone who bought a house using a conventional loan who has mortgage insurance, keep an eye on values, because once you have at least 20% equity in the house, call your servicer and you're going to say, hey, I want to get my mortgage insurance removed. It looks like I have enough equity. Most of the time they are going to charge you for an appraisal. So you want to be pretty darn sure. Or sometimes people are like, I'm willing to pay, a couple $100 just to try to get rid of it. Check Zillow, check Realtor.com. They're not perfect, but they're somewhat accurate. If you're still talking to your real estate agent, ask your real estate agent. Just say, hey, I'm trying to get my mortgage insurance off. Do you mind running comparable sales just to let me know if I should call my servicer? Most of them are super happy to help because they always want to stay in contact with you. So you call the servicer, they'll send out generally an appraiser. Sometimes they can do an automatic and then it gets removed. A lot of people don't realize this, and it's because lenders benefit from disinformation. If you think that you have to refinance to get rid of mortgage insurance, they make money. Well, we don't need to do that. So if you have one of those magical low rates and you think your house is worth a lot more, call your servicer and get rid of that mortgage insurance. The other time you would reach out to your mortgage servicer is if you saw online, like there's a lot of YouTube videos about paying bi-weekly in order to get a lower overall payment on interest over time. You need to call your servicer before you do anything like that. One thing that's so important that you realize, always make a full payment. If you pay $1 late, or if you're like, oh, I'm gonna pay everything but $500 and I'll pay the $500 next week, no, they're not gonna count it. Like, you need to call them and tell them what's going on. And a lot of them don't allow bi-weekly payments. So whenever you're making a mortgage payment, pay it in full. Otherwise, what can happen is they put it aside as a partial payment. It doesn't go towards your account. You get hit with lates. You can lose your house in a foreclosure. It's horrible. Don't do it. Do not do it. I've seen some crazy stuff in the years, not my clients, but people coming to me saying, hey, this is what happened. And I'm like, wow, it's going to take a while to fix. Okay, what else? Your escrow account. So the escrow account is what most people have big questions about. Some mortgages are set up where your taxes and insurance are part of your monthly payment. If you have a mortgage like that, you have an escrow account. Here's what you need to know. The mortgage company, the loan servicer, typically does an escrow analysis once a year. This is important. So when I, the lender, close your loan, depending on the state, like in California, I'm gonna estimate for what I think the tax collector will assess the property at. In Texas, I'm gonna go off of current property taxes. So what can happen is your taxes can go up, right? They can go up. And if, let's say, they just did an escrow analysis, 4 months later, tax bill comes in, it's much higher, insurance comes in, it's much higher, they may not catch it until all the way around to that year. So what I always tell people is make sure that you're keeping an eye on your mail. If you see that the taxes or the insurance is coming in higher, so for example, if your taxes, you get a tax bill and you're like $6,000, go to your mortgage statement and look at the escrow amount. If you're only collecting $200 for taxes and the tax bill is $6,000, there's going to be a big difference coming. So in a situation like that, I would recommend call your servicer and say, hey, I would like an updated escrow analysis. I just got the tax bill. It looks higher than what was originally collected. There will be a balance due, but the sooner it's caught, I can't talk today, guys. The sooner it's caught, the less brutal it is, and that's why if you go on chat forums and stuff, you'll see people go, oh, my lender screwed this up. I got hit with $8,000 in taxes. And it's like, sometimes you'll see that with new construction. We don't go off of land, we go off of what we think it will be, but there's a lot of lenders that just go off of the land because it hasn't been assessed yet. So you'll see those bills jump. Sometimes it's just the unfortunate luck of the lenders going off of the current taxes, but within the first year it jumps and you see that happen. So pay attention to your tax bill, pay attention to your insurance bill. If you see them higher than where they were before, call your loan servicer, let them know, ask for an escrow analysis. If you're like, I don't want to call them, Jen, okay, just know you've got a bill coming. So if, for instance, they've been collecting $200 a month for taxes and it's $500 a month, start setting aside at least $300 a month. I would probably say $400 a month, just to make up for whatever that time period is, but I would recommend calling them, okay? Because one of the biggest frustrations, if I'm going through chat forums and just people's complaints in general about owning a home, it's always, my bill went up and I don't know why. And it's always taxes and insurance. Most mortgages are going to be 30-year fixed. I haven't done an ARM. I don't think I've done an ARM in like 4 years, right? There are some lenders that do adjustable rate mortgages, but if you're working with me, you have a 30-year fixed. Like, it'd be shocking if you didn't. With a 30-year fixed mortgage, that principal and interest never goes up, but taxes and insurance can, and we don't control that, and the loan servicer does not control that. So you always get a copy of the tax bill, you always get a copy of the insurance bill. Keep an eye on it, okay? And something I would suggest right now is make sure you have insurance. I know that sounds crazy, but I've been watching the California fires, and there were a lot of cancellations. Some people were aware, some people weren't aware. I was just talking to one of my friends in Florida, and he was telling me how he got notified by his insurance that they want him to talk to other insurance companies because they don't really want to insure him unless they have to. And I was like, you need to do that now. He's like, I was gonna wait. I'm like, no, do it now. So really pay attention to your insurance. I would go online, just make sure your insurance is valid, see if there's been any increases, because that's the thing. Depending on where you are in the country right now, we're seeing increases. Florida homeowners are seeing increases. California, of course, you're going to see an increase. Louisiana, parts of Oklahoma. So you do want to pay attention to this so that you're not caught off guard. And what happens when you're caught off guard is you get a notice that's like, you have an escrow shortage. You either owe us $5,000 or, a new payment of this. Either way, your payment's going up, right? But you want to be on top of it. Okay, when else to call your servicer? If for any reason you can't make your payment, and I mean you cannot make your payment, I can't stress this enough. So if you're in a situation where you've lost your job and you've been making your payment but you just can't anymore, call your servicer, okay? There's forbearance programs, there's loan modifications. The reason why I say a word of caution is because When you go into forbearance, forbearance is basically when you're saying to the mortgage company, I can't make my payment. They say, okay, we're going to give you some time, so we're going to not take payments from you for a while. While they're not taking payments from you, they're adding that amount. It's growing, it's growing, it's growing, it's growing. And what I've seen is that after the forbearance ends, it's not like you go back to your original payment, because now there's a huge chunk of new debt, right? And I've seen mortgage companies do it different ways. You have some where they turn that debt into a second mortgage. You have some where they put that debt on top of your debt and they increase the rate. That's why I say do not do that unless you have no options. And you may be thinking, well, Jen, who would do that unless they had no options? During COVID-19, there was so much advertisements about forbearance that people, like I had clients that were like, and I tried to talk them out of it. I had two very successful lawyers that were like, Jen, yeah, we're just not gonna make our payment because it's gonna give us a head start on our son's college. And I'm like, what are you doing? You know, like this is gonna come due. Like you're gonna owe this money. They're like, no, I don't think they're just erasing it because of COVID. No. The bill always comes due. Lenders never just stop the mortgage. The mortgage is growing, 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 and there's always a bill to pay. So if it's an emergency, if you have no options, yes, do it. But if you're doing it because you're like, it's just a little tight and I really want to go on vacation, or I want to save for this, or I want to pay off my car, no, don't do it. Don't do it. Okay? I mean, look, do what you want, but just don't say when it goes sideways, like I told you, okay? And I don't want to say that. I never want to say that to you guys. So let's just stay away from that unless it's an emergency. The other thing is if you enter into one of these programs where they're saying, okay, yeah, you know, we think that your payment will be this, you need it in writing. I can't stress it enough. Like the forbearance and the modification, there's been so many nightmares over those in the last, honestly, the entire time I've been in this business. You really, really need to be careful, and you need to watch what's in writing and what's not in writing, because just because someone says something doesn't mean it's real. Unfortunate, but true. Okay. When should you ignore them? Okay, I always get a cackle out of this because I'm like, you guys are just wasting money on postage. Like, how much money are you wasting? You're killing trees. I get so much mail to refinance, and all of the mail telling me to refinance is from my loan servicers. They're saying, Jen, we have a great opportunity for you. Jen, we've analyzed your mortgage and we can bring you savings. And I laugh. You know why? I have one mortgage at 2.625% on a 30-year fixed, and I have another at 3.375. I am never going to refinance in 250,000 years. And any loan officer knows that, but the loan servicers just send out all this mail because a lot of times people, I mean, look, if you're not a lender, you don't know that rates are nowhere near that. So you're like, oh, I'm getting a letter from XYZ Corp and, you know, they have my loan now and they're saying there's a benefit. I should call them. No, don't. Just don't. I mean, look, go on to mortgagenewsdaily.com and look at rates. Do not call these people. I cannot stress that enough. And the reason I say that, I was talking to a gentleman recently and he'd had like a 4% rate. This was VA. And now he's at like 8.25%. And I'm like, what happened? He's like, oh, well, I did a cash out refi. And I'm like, how much cash did you get out? He was like, well, the lender made more money off of it than I did. I got about 10 grand. I'm like, you went from 4% to 8.25% for 10 grand. That makes no sense. You know, it doesn't. And the thing is, did he know that? Of course not. He was counting on the loan officer to be ethical. And the bottom line is a lot of these people aren't. They're just trying to get a paycheck and you're that paycheck. So the biggest thing that I'm seeing right now with loan servicers is they're aggressively going after people saying, oh, you want to consolidate your debt? Consolidate your debt. Every lender does that. Like, I wouldn't be surprised if there's mailers with my name saying that. I'd be horrified. But all the lending companies send this stuff out. Loan servicers are worse. So when you get something that's like, hey, you can consolidate your debt, guys, don't. If you have one of those beautiful rates, 2, 3, 4, 5%, do not refinance unless it's an emergency. Okay, if you're like, oh, well, I have a 2.5, but I really want a new kitchen, don't do it. It's not worth it. I'll do the math for you. Call me. I will do the math for you and prove to you that it is not worth it. Okay, I will talk you out of the refinance. I do it all the time. If it's a life or death, if it's medical, if it's something like, oh my God, we have $100,000 in debt, we're going to lose the house if we can't figure out how to make this more approachable. Because let's be real, credit cards are like 30% interest now. Okay, but if you're trying to pay off like 5, 6, 10,000 and there's another way, like maybe a home equity line or a second, better options, okay? Are these people going to tell you about the better options? Maybe, maybe not. You know, if you liked your original loan officer, call them. Call them, you know, and it's funny because September, we had that beautiful 2-week window and I started reaching out to my clients. Like when I personally reach out and if someone gets an email from me that's like, hey, it's time, it's time. It's time. And I reached out to a couple people who were like, oh my gosh, Jen, we wish we knew you did refinances. Here's what you guys need to know. Every single loan officer in America does refinances. They do purchases and they do refinances. So if you liked your loan officer, stay away from here. Go back to your original loan officer because the loan officers that do purchase business like I do, right, we're not just in it for a quick buck. It's a long relationship. Whereas over here, they're just trying to get some money. Give us some money, give us some money, give us some money, right? And you need someone who's going to be able to walk away from you as a paycheck. That sounds terrible, but it's true. Like you need someone who can go, this doesn't make sense. Have you thought about this, right? So anyways, trying to think of what else. I think that's the biggest thing. It's like, you know, just hearing the stories about people who have been talked into refinances that don't make sense because someone goes, oh, it reduces your overall payment every month. Yeah, but guess what? If you put $3,000 on that credit card again, you're in the same position, you know? So really be cautious. Overall, loan servicers, from what I've seen, I don't get a ton of complaints. I probably get one a year. We're very careful with who we sell loans to, who we sell the servicing to. And the reason we're careful is because we want our clients to have a good experience. So questions, comments, as always, reach out. I think that's the big stuff though. I was trying to think if there's anything else, but I don't want to go on for days. So look, I appreciate you guys tuning in. I hope this helps you understand loan servicers a little bit more. Questions, comments, drop it in. We're here to help you guys. Thanks for watching.